Well, I wanted to think a little bit about short-term strategy and long-term strategy from a company perspective. I think everything I see in the news right now is definitely focused on the short term, given the global pandemic crisis. What will your earnings and revenues look like in quarter two, quarter three, quarter four, and that type of thing. However, the abundance of research out there suggests that it's the long-term strategy, the long-term decisions that ultimately impact the true value of a company. You can use this information to pick better investments. There's all kinds of research out here. Here's a couple of pieces or a couple of data points that I found with a quick search. Number one, 80% of financial executives would cut discretionary spending on research and development, advertising, maintenance, or hiring needs in order to meet short-term earnings targets. They would forego positive NPV projects in order to meet current earnings targets. They're sacrificing the long-term value of the company for short-term targets. 40% of CFOs would give discounts to customers to make purchases this quarter rather than next quarter. Again, they're trying to move up revenues to make this quarter's earnings look better, when in reality, the money coming in would be the same. Focus is on the short term. And again, there is tons of evidence out there that shows that long-term focus tends to produce better long-term results. For example, companies that are focused on the long term have 47% more revenues on average than companies focused on the short term. Earnings are 81% better on average for companies that are focused on the long term versus the short term. They create 130% more jobs on average. And there's a really neat piece of paper out there where they discuss how the amount of value destroyed by firms striving to hit earnings targets exceeds the value lost in high-profile fraud cases. I think one thing you really want to pay attention to are companies that are meeting exactly to the penny earnings expectations, or beating by, say, 1 cent earnings expectations. It's a clear signal to you that these firms are focused on the short-term earnings targets at the sacrifice of the long-term performance of a firm. When it's not the case that they're just meeting or just beating expectations, you can ask questions in a more meaningful way when you're talking with management. In lieu of saying, do you have any concerns about the effects of COVID-19 on either short-term or long-term results? They can easily come back and say, we're fine. We don't have any concerns. In lieu of saying, what concerns you the most about the effects of COVID-19 pandemic on your short-term or long-term results? You're forcing a question there. You're soliciting an actual response. They can't give you a canned answer. You could also say something like, if someone were to criticize your long-term or short-term response to the COVID-19 pandemic, what would they say? Again, you're trying to get an outside view, something that's different than their standard canned answer to a question. Use that to your advantage. The goal here is to drive or try to determine whether or not their focus is more on the short term or the long term. You're looking for investments where they're truly focused on the long term. They're not going to sacrifice, R&D and things of this nature today in order to make the earnings look a little bit better over the next couple of quarters. You're looking for the long-term focus. Ultimately, what I'm trying to get you to do is dig deeper, look for things that drive better investments, better investment picks. Thanks so much for listening, and enjoy the rest of your day.